Good morning. I want to thank everybody for joining me on our call today. Today, I want to talk about the importance of life insurance policy audits. Too many people buy their life insurance and then throw it in a drawer, let it collect dust, and forget about it. However, policies are just like other financial assets. They need to be reviewed, routinely to make sure they're the best fit for the client. The industry's continuing to evolve. They're adding new products that can benefit our clients. And as well as our clients' goals and needs are going to constantly change as well. So if we look at policies, with every policy, there's different things that can happen here. Of course, with every life insurance policy, we know there's a death benefit, and how much death benefit our clients need will always drive a lot of the policy design. But if you look at it with a lot of today's living benefits, we can have long-term care benefits or long-term care like benefits added to the policy to help our clients if there's a severe illness, injury, long-term care need, another way to use this policy. And of course, we can, in many policies, build up the cash value for that what if bucket of money, that money that can be used in retirement, that's tax-free income that can benefit the client, to reach their financial goals. And of course, our clients can have all three of these elements in their policy. It just comes back to making sure that the life insurance policy matches up to what our clients need. Sometimes these can be done in one policy. Sometimes we need multiple policies to make sure that we're helping our clients hit their goals. As you get into the policy review, there's several questions that we can start asking to make sure that we're understanding, what our clients need, and they're again making sure that the policies that they have in place are meeting their goals. The biggest thing that I see is, life events. Life happens. And as those life events occur, are the policies that our clients have keeping up? Think about this. If there's a marriage, a divorce, birth of children, grandchildren, death of loved ones, changes in their business needs, all of these things can affect, the amount of life insurance that the clients need to have in force. And of course, the goals of our clients are always going to be changing. As our clients get older and they mature in their business, mature in their relationships, a lot of times those goals change. And some of it has to be that there's financial pictures improving throughout their life, or they're getting closer to retirement. There again is the policy matching up with our clients' goals. If you think about the death benefit, and especially as the life events and goals are changing, we may need to go and get increased death benefit coverage, which means maybe adding another policy, converting some term policies, whatever it is to make sure that the death benefit matches. And sometimes, the death benefit need goes down. If we've had business insurance, we know we're no longer part of the business. We don't need buy-sell insurance, key man insurance. Any of those things can affect the amount of death benefit need that our clients have. There again, we just want to match up so that we're not overpaying for an asset that we don't need. Of course, premiums change. And we would always wish we had bought the insurance when we were younger and healthier. But sometimes those premiums need, changes, affect the amount of death benefit we can get. There again, if you look at a lot of the industry, the mortality tables have changed. So from a mortality standpoint, insurance is getting cheaper. So we just want to look and see, can we help our clients get the benefits that they need, potentially with less premium, or maybe we need to increase the premium because we need to increase the other benefits in the policy. As you look at, your clients, a lot of, our clients have bought term insurance throughout the years. When is that term conversion going to expire? When's that policy going to expire? Do we need to make sure that policy continues? We know at the end of a term policy, during that guaranteed term period, typically the premium's cheap for the amount of insurance that's being purchased. However, when that term expires, that premium is going to jump substantially. So we just want to make sure, do we need that coverage, and what's the best way to carry that, that term coverage forward? Maybe it's another term policy. Maybe it's just extending that time period out. But it's there again, it's making sure that we have it. As you look at your policies, is this policy going to lapse? And I see this where clients have, stopped making premium payments. And as they stop making premium payments, of course, the cash value goes down, the duration of that policy goes down, and whoops, a lapse happens. And we may not be able to get new coverage because of health, other underwriting concerns. There again, let's make sure that we stay ahead of these problems and ask the questions, what do we need to do to make sure that coverage stays in force as long as our clients need the coverage in force? As you look at the industry is forever changing and improving. One of the biggest improvements we've seen is the addition of the living benefits. If you think about the living benefits, it's just creating another way for our clients to potentially be using the policy that they've purchased. And these living benefits can either be long-term care riders, or it can be chronic illness riders, chronic injury riders. Basically, if you think about it, it's things that affect our health and long-term care needs. So it's not just using the cash value of the policy, but it's an acceleration of the death benefit to cover those long-term care type needs. A lot of our clients, if they knew this was available, they would love to have it on their policies. And if you want it there more for long-term care, possibly add a long-term care rider. If you don't know if you'll ever need it, then a no-cost chronic illness rider or chronic injury rider may be the right thing. There's no cost to have that in the policy up front. There will be a cost if they access that benefit when they accelerate the death benefit to cover the needs. There again, just more ways to help our clients meet the needs that they have. Of course, we know with life insurance, we can have cash value policies that are going to grow the death or grow the cash internally, income tax free or tax deferred, and can be accessed tax free. There again, is that something our clients need? Is it something that would benefit their financial picture? So if we can look at it and see, can we add those cash value types of policies? It's great. Now with every policy, we want to make sure the beneficiaries are correct. I don't know how many times I've had to deal with an estate where the death benefit of the life insurance didn't go where it was supposed to. Somebody didn't keep up with that, and it caused problems in the estate itself. Similar to this conversation is, do we need to have the policy outside of the estate tax? If so, let's deal with that. We know that we're going to see some changes probably to the estate tax rates in the end of 2025. This is a good time to be talking to our clients. Do we need to plan to get that outside of the estate? And along with that, do we need to have asset protection for the policies? Many states have asset protection for life insurance, but a lot of states don't. So if you are worried about asset protection, there again, this is an opportunity for us to help our clients make sure this asset is protected for them, their kids, their heirs, their business, whatever the need is. Finally, if our client's been taking loans or withdrawals from the policy, do we need to either pay off those loans? Do we need to reduce the death benefit of the policy, exchange it to something else? There again, the client's if they've been using this policy, let's make sure the policy is going to be there. As we ask these questions, it just comes back to us helping our clients complete the puzzle of their life insurance, making sure that whatever the needs are, that it's protected, that it's there, and our clients are taking advantage of this great asset, this great financial tool, as long as they need it and it matches up to their goals. So I appreciate everybody getting on. If you have questions, feel free to reach out, and I'm happy to be here to answer questions. Thanks again. Bye.